Anand Shah is with us, head of PMS and AIF Investments at ICICI Pru Asset Management Company. Anand, good morning. Great to have you with us here. Thank you very much for your time. I know you look at slightly longer-term trends, but I do want to get a sense on the slightly near-term from you. Do you have a view whether we're in the midst of a bit of an ongoing corrective phase for the market? And would you say that the go-go phase, which was every small dip getting bought and the market rebounding back to new highs, that is now behind us for sure? What's your sense?
Hi, very good morning, and thank you for having me here. So, look, to be very honest, we didn't have too much of a support from the global markets. We are fairly aware. 2022 went into the Russia-Ukraine conflict, and more recently we have another conflict up there, plus tightening of interest rates and higher interest rates in US. There is an imminent expectation that the economy should slow down there also. So there has been a destocking cycle. So the global markets and China, of course. So global markets have been challenging. And in midst of that, the Indian economy was chugging along, and obviously the markets were also doing very well. So rightly so, we've been doing well against many odds. Now we are reaching a stage where India will also enter into some bit of a scenario where we will have state elections followed by general elections, and to that extent, there would be a little bit of uncertainty in the domestic front also. Though it might not have any longer-term impact, but as you rightly asked me, the near term will remain a little more muddled than it was 6 months back, given that we don't have global cues which allows the market to go up convincingly.
Okay, by the way, I just want to point out, after the rally yesterday, KPIT Technologies is seeing an additional 5% rally today. Remember, the company raised its full-year revenue and margin guidance for FY24. They now have a constant currency growth outlook of 37%. So KPIT Technologies is a 10% rally in less than 2 days that this stock has seen. Anand, hi, good morning and thanks for joining in. How are you feeling about the IT space now? It's a mixed bag here. There are some companies that still talk about slowdown, client delays, etc. But then there are others like KPIT Technology that are raising their guidance. How are you feeling now?
Yeah, many good morning again. So yes, that's been the case. Many small and mid-sized businesses across the sectors also been able to tide over a little bit of slowdown, a little bit of uncertainty better than the large businesses. So yes, large companies are directly impacted by slowdown in overall IT spending. And we are seeing that in the large businesses, the Infosys of the world and others, where the numbers are soft, but at the same time, even the guidance has been softer. What is happening in mid-sized businesses, small-sized businesses, they are able to get a couple of contracts here and there, or they are able to, overcome some loss of business from existing clients through newer wins. So yeah, it's more bottom-up from here, especially in small and mid-cap businesses, sector-wise, across the sectors also. That's the case, whereas the large businesses will have to depend on macros. And those macros, as I was saying just a while back, remains challenging for a time being.
Okay, hi Anand, good morning. Anand, what's your view on real estate? We had Mr. Abhishek Lodha yesterday who joined in, and he says that typically we see a real estate cycle of around 15 years and we're just in year 3, so he believes there's a big runway ahead. What's your view on that space? I mean, view on real estate, and how would you play that theme if at all? Would you play it by the core developers? Will it be some of the ancillaries or maybe the housing finance companies?
Yeah, so I think it's a foregone conclusion that India needs more housing, and housing would remain a very, very large pillar for not only the private sector investments, but even in terms of job creation. It has its own virtuous cycle. It is one of the largest employer in that sense, and it's all pervasive impact on various industries. So you're right, there are many sectors which will benefit as real estate picks up. I think something which is sort of a little bit always in case of India impacts the cycles more often than not is a sharp increase in the prices. I think for this real estate cycle to sustain far longer, I think we need supply. and we need enough and more supply so that the prices don't run up. Indian real estate prices compared to our per capita income is already very, very expensive in various large cities and towns. And to that extent, one thing for this real estate cycle to sustain is benign prices. I think incomes are growing, but incomes are not growing rapidly. On top of it, if you see IT sector, particularly, which contributes very largely in terms of organized workforce and among the people who can buy luxury houses, there we are seeing for last couple of quarters slowdown in terms of new hirings as well as net employee count. So I think the key factor would be the prices. Prices have to remain benign, and to that extent, the supply should sustain. Otherwise, demand is always there. Yes, again, which sectors? I think sectors across the board will benefit, but we'll have to also keep an eye in terms of what is the competitive intensity. In many of these businesses which support housing, we are seeing increased competition. So despite of demand and increased competition, rightly because demand is growing, one need to be very, very clear that the margins can be under severe pressure. So it will be more bottom up. You will have to identify businesses where profitability can sustain at current or can also improve if participate in the overall growth.
So, Anand, how are you feeling about autos now? Because we've had some really good numbers, right? Whether it's Maruti, whether it's TVS Motor, record high margins. Of course, raw material prices are also softening, but demand is picking up. So, it's sort of like a blue sky scenario for the auto companies. Is this a multi-year upcycle that we're looking at?
Again, we have seen a sharp volume improvement, and that was expected, given that there was artificially some sort of slowdown, given there was semiconductor issues. So volumes have come up nicely for at least a couple of companies who have been able to improve volumes. Raw material prices have been benefiting, and to that extent, margins have also expanded. I think what still ails the sector and that keeps us a little bit cautious on this sector is twofold. One, interest rates remains elevated, and to that extent, that's one negative. Oil prices always, again, on the back of two conflicts going around in the world where we have a supply of oil coming from. So any sharp spike in the oil prices can hurt. And the last, but more structurally, is the transition from ICE to EV. So that also is a big headwind which many of these companies will have to tackle, well into the next decade. So all these factors makes us, a little bit more cautious and more bottom up rather than top down on the auto sector.
All right, Anand, what about the pharma space? Out there you're getting a couple of earnings surprises. Cipla did pretty well. You had Piramal Pharma. So some of these names, actually, the pharma index on the whole has been a big underperformer if I take a look at it a 5.5 year horizon. But it's been showing some kind of a pop, particularly in the last 12 to 18 months. Do you believe there is further upside from here? Maybe the worst of pricing is behind, supply side issues as well getting resolved?
Indeed, I think pharma has to be really bottom up. Many a times you would love to have an answers which are more generalized, more sector specific. But pharma, each company is very uniquely poised. There is no, at least for now, obviously there was an early phase in the sector when US generics was just taking off. India didn't have large share, and to that extent, broadly, all the companies were benefiting as they were entering US generics. Now we have reached a phase where people have different business models, they have different exposure to US generics, domestic pharma. And to that extent, each of these businesses are very different and very unique. And that's why the performance is not very, very homogeneous. And that's why it's very difficult to give you a view. Even then, if I were to try and give you an overall view, I think the pressure which was there, the pricing pressure, the intense pricing pressure which was there in US generics in general seems to have subsided a little bit. And that's been a respite overall for the sector.
Anand, just to talk from shift from secondary to primary markets, the Mamaearth IPO opens today, right? I'm sure you've met the management or your team has met the management. What are your first impressions?
I think, again, each IPO is unique. It's to be evaluated. bottom up. Obviously, the information available in the secondary market is much more, and the history is available, which is a lot longer. And to that extent, the primary markets will always remain difficult. On top of it, what we've been generally as a fund house been very, very conscious of the valuations which are coming through in these primary markets. We've been on record saying, convincing consistently that the valuations, one needs to be again very careful of what price one is paying. The primary markets, to us, believe is fairly rich in pricing, and to that extent, each company will have to be evaluated.
Okay, you gave us an answer without saying very much about this particular situation. But Anand, just a quick word on the PTMs and the PB fintechs, and actually those two more than anything else. There's a lot of interest now, especially now that many are near that profitability threshold. It's visible. Zomato, of course, is the third one, the trio.
Sure.
Do you own any of those? Which ones do you like and why?
No, so again, as this entire market is now poised where there's not much discovery left. And I'm just not talking about the tech companies or a fintech companies or these innovators, but across capital goods, across industrial products also. We can't really say that now the market is undiscovered, and to that extent, a lot is yet to be. A lot of growth is still mispriced, or there's a lot of value left in the market. So my answer to investors in general should be, from here on, it will be not easy. One will have to be very, very careful on what you are investing in. Stock picking becomes that much more important as there's been a significant price discovery on many of these companies. Coming to specifically your question, I think the innovation businesses are the trickiest, I would say. Even for professional fund managers like us, it's not easy, and we will have to continuously learn and evaluate them. And on top of it, there has been disruptions, or even the disruptors have got disrupted. Look at UPI. UPI per se disrupted all the sort of income which was possible through transactions. And even today we are looking at credit cards, debit cards also suffering, as UPI has just removed one large revenue stream. So again, I'm repeating, these businesses are difficult, they're trickier, and to that extent, you need a lot of research to understand them. We've been fairly cautious on these names.
Yes.
Got it.
We've avoided many of these names.
Okay, Anand, always good hearing your thoughts. Thanks so much for stopping by and filling us in with your view on the markets. Looking forward to having a chat with you rather soon.